Hey guys, what is going on? Welcome into the video. So in this one, we're going to talk about what played out at the FOMC meeting last week, how the market reacted to it, and some scenarios to watch for in the broad market next. After that, we're going to go over some overall thoughts on fundamentals right now, and then talk about a bunch of trade ideas for the week and weeks ahead. And as always, there are timestamps in the description. Let's go ahead and get on into it. So at the FOMC meeting, there's pretty much no big surprises. The Fed raised rates 25 basis points as expected. Powell continued to talk about 2% inflation being the goal and stated they are supportive of banks and the system is, quote, sound and resilient. How the market reacted to this during FOMC was there was an initial spike, followed with a volatile chop before a violent sell into the close. Like we talk about all the time with these events, the first 1 to 2 moves are almost always fake outs, which is exactly what played out once again with that fake out to the upside before that violent sell into close. So after FOMC though, what played out the rest of the week was not convincing for either direction. The overall structure of the S&P Futures chart that has been forming over the last 3 weeks or so has been a bear flag or rising channel pattern. So these patterns will usually resolve with a break below the trendline support, which starts a sell below there. The trendline break happened on Friday morning, as shown on this chart, but bears failed to follow through on this move, and once the trendline was reclaimed back above, that triggered a false breakdown and squeezed shorts into the rest of the day on Friday. So in this market right now, we're seeing a lot of failed moves and not a lot of follow through on direction to either side, but that will likely change soon. Taking a look at the SPY monthly chart, the market has essentially traded in a tight range between 380 and 411 for the past 5 months, and it's also trading close to the same prices seen 10 months ago. Along with this, unless we close next week either above 409 or below 382, this is a triple inside candle setup on the monthly chart. So what that means is the SPY has closed between this December candle body for 3 straight months, and once this either closes above or below it, a big move is likely to follow through in whichever direction that breaks. In the grand scheme of things, the market has not moved much. As we were talking about, this is the same level seen since last May. One of the biggest things in technical analysis is after consolidation comes expansion, so it is likely that we are setting up for that big directional move very soon. Now going back to the S&P Futures chart, let's go over some key levels to watch and run through some bull and bear scenarios for the week and weeks ahead. So going into next week, the short-term pivot continues to be the 4,000 to 4,010 zone, where the short-term trend is up if above and down if below it. On the upside, I'm watching that trend line currently between 4060 and 4070 as the breakout trigger, which would set up the next leg higher out of this current zone above. On the downside, I'm watching 3837 as a key level. Bears need a lower low below there to start continued downside, and from there it can revisit the 3885 to 3900 zone, and then the trend line at 3860-ish, which would be the real breakdown trigger for a big downside move. This lower trend line is super important as it has acted and been a key spot since June of last year. Alright, so now taking a look at some scenarios to watch for moving forward now. The simple bull case from here could look something like this. We have a possible inverse head and shoulders pattern in the making as long as this holds above Friday's low, and from here it could push up, retest the upside trend line, and then eventually break out above there. The bear case from here could look something like this. If those recent highs hold, the bear case would start below 3837, which was Friday's lows, and this potential bearish head and shoulders pattern in the making to where it can make its way down to those levels below, and the big breakdown would happen on a break below that lower trend line. On larger time frames, the big question continues to be whether this current pattern plays out the same way that it did in 1973, 2002, and 2008. The risks are certainly there fundamentally, as the spread between the Fed funds rate and the 2-year yield is now over 100 basis points, and this deep of an inversion has only happened before major events and market crashes, just as shown on this chart. But as traders though, the focus should be trading what's in front of us, and so far there is no definite bull or bear technical case, so it is best to say mostly unbiased until then. I think it's important to know the fundamental market outlook and what that could lead to, but at the end of the day, what matters is making money in the market, and that comes from reacting and not predicting. So now getting into some individual trade ideas and what I'm watching for in the week ahead. So quarter 1 in the month of March ends this Friday, and one thing that I think may be going on behind the scenes is a lot of end of quarter window dressing from funds and institutions. So as we know, tech stocks have been hot recently, and for their quarter end reports, funds want to show their clients that they're holding the best performing stocks in Q1, and I think that Apple, Microsoft, and Nvidia are the main culprits here. These and the majority of big tech stocks have been holding up the market for the past couple months, and if this is just a momentum trade for quarter end, there's a good chance these get sold off at the start of quarter 2, which will be after next week. So like I was talking about, if window dressing is the case here, I think Nvidia, Apple, and Microsoft are the main candidates to get a sell after this quarter ends. They're all trading near historical high forward valuations and are expected to grow at historical lows. For example, Nvidia is expected to grow revenue at less than 5% for the next 12 months, Microsoft at about 5%, and then Apple revenue is actually expected to decline by about 1% in the next 12 months. So if you ask me, I think Nvidia is just a pure momentum play on AI hype. I think Apple is a flight to safety play, and I think that Microsoft is kind of a combination of the two. All of the above, though, are trading for way too steep evaluations for their future growth right now, and where rates are trading at currently, though, in my opinion. Nvidia overall is my main short focus, and I think it's very close to topping if it has not already. So last week we talked about it breaking above this rising trend line, which is an exhaustion and topping signal. This week it did go a little bit higher, but it continues to show signs of distribution. Along with this, it keeps on getting analyst upgrades, which does sound bullish, but it's pretty dirty what institutions will do with this. They'll get their analysts to upgrade the stock, and then they'll start selling their positions, using that gap up as exit liquidity that comes buying after those analyst upgrades. So for downside to start for this stock, a key support needs to be broken and held below, which is now 263.5 to 264.5. A break below there can start the decline down to the next levels below, which I marked on this chart. From here, bears want this to hold below 275, or could see another leg higher before topping then. For Apple, the setup is pretty simple here, as it recently broke out above the key 256.35 to 257.42 zone. It is bullish as long as it holds above that zone, but a break below would indicate a failed breakout, and that is when I would be looking short if that does play out. And then finally, a quick look at Microsoft. It's currently set up in a rising wedge, which is a bearish reversal pattern, but still has continued to show strength. For downside, it would need a break and hold back below the key 275 level, and a possibility here is that it moves a little bit higher first to fill the gap at about 286, and that is a spot I'd be watching for a possible short-term top if it gets a strong sell reaction at that point, which would likely line up with that trendline resistance of the wedge as well. So now if the market continues higher from here and we see that bullish scenario that we talked about earlier with the S&P Futures chart, one of my main long focuses now is going to be Tesla stock. Now I was bearish on this stock when it was showing that distribution action near those recent highs, but it has now had a healthy pullback and held support right where I needed to at 168.72. As long as it holds above there now, I lean bullish and think we could see a breakout soon, with a 200-day moving average at the first target above at about 216.7 currently. I'd be looking to enter long above 200.7, which has been a major level, and looking for a move up to the 200-day moving average as that first target as talked about. So that is everything that I'm watching for in the week ahead for the broad market and those individual stock setups. Hope you all enjoyed and hope I provided some value to you. If so, make sure the like button and subscribe button down below. Helps me out a lot. And for anybody interested in joining the private Discord chat, that is the first link down in the description. You get my personal trade alerts, nightly watch list, and you can ask me any questions there. Thanks so much for watching, guys. I will catch you next time. Good luck trading this week, and peace out.